amid growing concerns about economic growth.
Consumer spending was
As
soft.
expected, cut interest rates another quarter point.
We are following breaking news. All three major American stock markets have closed down.
Bitcoin rose 10%.
Even gave the stock market a temporary second wind.
The market reaction, it was kind of nonplussed.
Tariffs going into effect tomorrow.
But the NASDAQ was also.
Investors will be watching closely for more clues about the direction.
It's time to tune out the noise and tune in to great information with a steward's view. Expect valuable economic updates, investing techniques, and planning concepts that move you to be wise and decide well. You'll be equipped and encouraged in a stewardship mindset, managing God's resources 1 week at a time. You can listen to this podcast and previous episodes at astewardsview.com.
Welcome back. I'm Aaron Kolkman. That's Chaz Lauder. Here's Paul Larson, and this is A Steward's View. I'm so glad you joined us again. Check out this weekly economic and market roundup later today on our blog post on this week's episode at astewardsview.com/blog. Our mission on ASV right here this week, today, is to help you cut through the information chaos of the digital era so you can be wise and decide well. And as we work to bring light to your financial decisions as stewards, in past weeks, we've gone through a number of financial planning topics, and we've gone ahead and we've paused that. We've looked even at the economic picture here a couple of weeks ago, looked at the job picture in particular, the government shutdown, and some topical things that are going on around us, as well as just the fundamentals of financial planning. And that series called Beyond Returns has now come to a close. It's kind of hard to believe, Paul. We've been in that for nearly 2 months. But that was a benefit to our listeners, I understand, because it gave them some practical thoughts about how to consider various aspects of financial planning. So now we want to enter into a series on investment planning. Okay. And I'll just quickly say investment planning is a very misunderstood moniker. Okay. It doesn't mean investing, doesn't mean allocating money, doesn't mean diversifying money, definitely doesn't mean optimizing assets. Okay. It just means kind of laying out how this is going to go. Okay. And so we're going to go into a series on investment planning. And this week we'll look specifically at what is it to plan your investments, and what does it look like to aggregate assets? And then how do you do it? Is it worth it? What does it cost? So this week, we'll also welcome special guest Richard Robertson from Genesis Publishing House in Oklahoma. Richard is a sought-after figure in the publishing industry, somebody that spent 15 years publishing books for authors of all different genres and various types. Very fascinating person to have on this program. He's been a partner to Fideri Media that publishes this content every week, and is somebody that I've grown to know and appreciate. He and his partner and his team there in Oklahoma. And so we'll talk with him about his work with just Genesis in general, but also the partnership with the Life Cycle of Wealth book. Before we begin, let's take a moment to examine our work, and let's look at it in the context of God's word about stewardship, about managing his money and his possessions. Paul, I think you have our vertical segment for today. What do you have in store for us?
Sure. As for financial professionals, we talk a lot about risk and return and volatility and economics and so on this podcast, but we always try to put it in the context of stewardship. And we've made the point that stewardship is not just about what we give, it's what we dare do with what we dare keep. Now, I know that can start to sound a little bit legalistic until we truly understand who owns everything, and that a steward is one who manages the resources of another in order to achieve the owner's objectives. Okay? Now we're moving into a series on investment management and the importance of aggregation and diversification and optimization. And these are vital for prudent investment management, and I believe can be actually demonstrated as prudent from a biblical perspective. But for a minute, I just want us to think first about the why before digging into the how. Creation itself and the creation of man illustrates God's intention for his resources and how we should be thinking about our role in his plan for this earth. We are to be fruitful, multiply, subdue the earth, take dominion or steward all the resources. And to what end? To fill the earth with flourishing images of him. Okay? That's his plan for this earth. Economics is how finite resources, the fall created scarcity. And how do finite resources that have multiple uses get allocated? Those resources include natural resources, capital, talent or ability, and they include time. I was once asked with a microphone suddenly stuck in my face, so what's the best advice the Bible has about money or investing? And of course, the Lord guided my words when I replied, well, Solomon said to spread it around because you don't know what kind of bad luck you're going to have. And then Jesus and the Apostle Paul said, don't worry about it. We might or might not hire skilled people to help manage our businesses, manage our resources, diversify and optimize our investments. But we must always battle the wasted time that goes into worrying about it.
Paul, thank you. And there's so much value in those words. We could just spend the next half an hour going through what you just said. But the idea that stewardship, you summed it up to me offline a little bit ago. Stewardship in a full-throated way is?
Well, it's the intersection of faith, work, and economics. Our faith, our work, and how we allocate those resources that are finite. And we don't know what the end of them are. We don't know how much time we have, but it's a finite amount of time.
The allocation of scarce resources is your definition of economics. And I just love that, because what it isn't is a statistical analysis, right? You're one of the first people that when we started this program back in March, and, I would go through the economic readout more for compliance reasons, frankly, than for, the pleasure of the audience. You would say, look, can we not do that, please? And eventually we found a way to not do that. So I'm glad we could get to that. But such a great definition of economics and a great vertical word. Paul, thank you. So pretty soon we'll get into the details of what it means to aggregate assets and why it's important, including some practical examples. I look forward to that. We'll talk about the challenges and the potential benefits of aggregation in the context of investment planning. Before we do, let's take a short break and also check in with our special guest for today. With that, Chaz, we'll take a break right now.
More of A Steward's View in just a moment. Investors have stocks, bonds, mutual funds, ETFs, options, futures, real estate, and more. There's one place to look at all of your portfolio. It's called Fusion, Portfolio Aggregation. No contract, no hassles. Fidere's portfolio technology gives its users a chance to see all of their assets all the time, wherever they are. The Fusion platform is open for use without a contract and without a hitch. It's based on mean variance optimization and analysis research by Aaron Kolkman. Fidere uses the Fusion platform to optimize assets for its clients. For more information, visit fidereadvice.com and click on Fusion at the top of the page. That's Fidere Advice, Fidere advice.com. Now back to A Steward's View with your host, Aaron Kolkman.
Okay, and so we're back here after our break, and I want to issue a special welcome to Richard Robertson, a publishing professional with more than 15 years of experience helping authors bring their stories to life. As the co-owner of Genesis Publishing House for the past 3 years, he's built a reputation for combining creative vision with practical know-how, guiding writers through the entire publishing process from the first draft to the finished book. He was born and raised in Indiana. He's a proud Hoosier who now calls Oklahoma home. He's a true transplanted Sooner. His Midwestern work ethic and heart for service have shaped not only his professional life, but also his leadership within the community and the church. A devoted husband of 27 years and father of 4, Richard's greatest joy comes from faith, family, and a good ball game. Whether he's cheering from the stands, worshiping on Sunday, or mentoring new authors, he brings passion, authenticity, and purpose to everything that he does. Richard, welcome.
Hey, glad to be here. Appreciate y'all having me on.
It's so good to have you. And, I can just say briefly, my testimony of getting to know you and your organization, and I know Paul and I did some of that together, was quite simply, hey, I've got this thing that I need to redo from a decade ago that didn't get the right attention, the right partnership, the right work done, and you've been able to do a lot of that, and you're about to do more. We've recently, I think, got to know each other well enough to where you and your group can now take and actually focus on getting more than just the Life Cycle of Wealth book on the shelf nationally. We're going to work at getting it better known nationally. So I'm really looking forward to that. Any updates on that effort, by the way, before we start?
Yeah, so interestingly enough, this idea that we've kind of come together on is you're the pilot program. So there's good and bad with that, right? But the cool thing is no one is doing this. There's no boutique or assisted self-publisher that's actually saying, hey, we're going to take our Rolodex of contacts, our 15 years experience, and for some sort of split, we're going to work on promote. Normally you pay for that, right? If you're self-publishing or boutique publishing or assisted publishing or whatever the industry calls it at the time, they're going to say, okay, we will promote for you, but you need to give us $15,000 or whatever their price tag is.
Right.
And then after you give them that, you just kind of go into this cookie cutter thing. Results don't matter at that point, right? Because they already have your $15,000.
Right.
And so this is, probably what we need to do is hop back on 6 months from now and go, okay, what
see how it went. Right.
Yeah, what good things, what bad things, what interesting things happened. Because my prediction is, since nobody else is doing this, the assumption that everybody you call won't listen is probably wrong. I think that's been the drawback for most small publishing houses is, well, we're not going to call Fox, we're not going to call the radio stations, we're not going to do any of that because nobody wants to listen. And then everybody has stopped calling. And so I think we have a niche here that nobody else is diving into. So I'm really excited to see how it works going forward.
Do you mean that as a publisher or in terms of the product? Because I'd like to think it's both.
Yeah, it is both. Absolutely. It's both. Well, so the product, just so I can, give your audience kind of a little plug on the book itself, it applies, because we're talking principles and not specifics, it applies to pretty much everybody. And I think when you and I had our first conversation, I said there aren't very many, financial pieces that my 21-year-old son, who's in a much different place financially than I am, I'm just, in the middle of life. We won't say right where it's at, but, as an almost 50-year-old guy, we're in different places financially. And so the industry would have us read different things because we're in different places. In this case, the product is a little broader than that, which I don't think there are a ton of those things out there. So I think we have a really nice market.
Thank you for that insight and encouragement. I've, quite literally wrote that book 12, 13 years ago now because of a call that God put on my life to fill a gap that's still a gap. And as you're pointing out, maybe an even wider gap. But that is that there is not a picture of what it looks like to steward finances for a lifetime, to navigate risks for a lifetime, to make decisions with the light of eternity in mind, any of those things. So I'm really grateful for your partnership that, quite frankly, the Lord has introduced that as well. And we have a Christian listener base here that's growing. So I'm really excited about how this is going to play out as time goes on. But thank you for joining this. Would you please, if you don't mind here, add a few things, what's happening at Genesis? What are you seeing as a publisher and how are things going?
Yeah. So Genesis Publishing House started 3 years ago. Out of my business partner and I, his name is Brian Martindale, out of our vision of finding some place that would deal with authors in a truthful manner. We helped launch about 13 other publishing houses. We would come in as some of them early in our career, we were employees. And then after that, we were 1099 hired guns who would come in and build a program, build pricing structures, build margins, tell kind of the company how this needs to go to give the author the best bang for the buck, and then we would move on. And what we found was an industry filled with 85% margin. And that you can't possibly give people good value if your margins are 85%. And so we just felt like God was calling us to start something where we told people the truth. Hey, this project is going to cost me. Like, nobody does that, I don't think. And maybe it's a horrible business idea, but it's been successful for us because people feel like we're listening to them. And so I'll get on the phone with an author, and we probably had this conversation. I'll say, hey, labor, technology, over all the stuff, your project's going to cost me $3,800 to do. So I've got to make a living. I'm going to mark up 20%, and we're going to do a deal. And 9 times out of 10, people go, oh, no one's ever in the publishing industry talked to me like that before. So yeah, let's do a deal. And so
I worked with 2 other publishers, and you're the only one that has done that.
Yeah, well, we appreciate that. And, the 2 tenets of Genesis, our founding statements were, we're going to give a good product at a fair price. We're not going to lose money, right? We have to make a profit to stay open, but we're not going to provide 85% margins. And then we're going to tell people the truth. So for every author that calls me and says, well, I've written the next, New York Times bestseller, and I just want to publish it and put my feet up and drink sweet tea and become a millionaire, that we crush that dream real fast because it's work. And so by doing that, Genesis has 250 projects published already from a 2-man outfit with a small 6 to 8 person production team. We feel like God is honoring the fact that we tell people the truth.
Amen. And what a simple, powerful business model of go out and do the honest thing and speak it while you go. I'm so grateful that you join us. Any updates on when the Life Cycle of Wealth book might be around a little bit more?
Yeah, so we should probably hit upload with the new couple of changes that we added in by the end of the week, or maybe middle of next week at the latest.
Right.
And then you, depending on how fast the retailers update, usually 3 to 5 business days after we upload.
And there are constant changes going on with this work. To your point earlier, Richard, that book took 3,000 hours for me to write before 2025 hit. Okay. And I think it takes Paul and Chaz, maybe 3 hours to read, if I'm right. Something like that. Anyway, so it is a lot of work. And so far, I'm not a millionaire from anything to do with media work. In fact, people ask me, like, how much money do you make podcasting? I'm like, zero. This is a calling too. So what a pleasure to have you on, Richard. And I wish you all the best with Genesis. And would you please give us a reference for how people can find you?
Yeah, just go to the website. It's genesispublishinghouse.com. We've got a contact us page. Of course, all of our social media is named the same thing. So yeah, we would love for you to reach out, and no charge for consultation. We usually just, and again, probably a terrible business practice, but we usually just give you our personal cell phone number and say, just call us whenever. And I think Aaron has found that to be true, that if you text me at 9:30 at night, I'll usually answer within 5 or 10 minutes.
Hey, we texted pictures of our kids yesterday. I can say that. Right?
Yeah, absolutely. And I think authors resonate with that somebody's listening to them.
Absolutely. And I know I've appreciated it greatly. So thank you again for joining us, Richard. Richard Robertson with Genesis Publishing House. He is, a major force in the publishing industry. He and his team out of Oklahoma, 3 years and running, 250 products and counting. Richard, thank you.
Yes. Yeah.
So for our core content today, I'd like to go ahead and focus on what we do when it comes to investment planning, and specifically asset aggregation. Asset aggregation is a popular thing in advisory offices. I have spent 25 years in advisory offices. It is not a popular thing other than at your 401k custodian. Okay. So for the end user, for you, the listener, the public, the investing public, when you go and try to say, okay, I'm going to pull together all the pieces of this investment puzzle. Okay. And this isn't the puzzle box, the big picture that we've talked about in financial planning terms, where we've got, your balance sheet and your income statement. This is a very specific part of your finances, and it's, financial assets on the balance sheet. Okay. So when you go and pull those things together, what you're doing, either in paper form or digital form, is you're gathering things into one view. Okay. And when I say it's popular in advisory offices, that's typically how this gets done, right? I mean, the 401k and custodians have caught on. They've figured out that they can gather more assets if they offer this. And you can typically find that at any number of asset houses where your 401k is also housed. Okay. But separate from that, okay, I mean, you're not necessarily, here's my trouble with it, Paul, is you're not necessarily getting counsel of any kind when you go and do that. Okay. You just click a couple of things. We've got that too. Okay. But our offer is different, right? When we say, hey, go out to Fideer Advice, this is our sponsor now. When we go to fideeradvice.com/fusion or click on Fusion at the homepage, that's an offer for independent oversight of financial assets that are already invested without being what? A custodian for those assets or an advisor for those assets. So I like to call it an ongoing second opinion, right? And that's a valuable thing. Why? Because you don't have to sign up for anything. It's paid for. Okay. You get to understand what's happening with every single data point in your portfolio from all the different places. And let me explain what it isn't. Okay. Because I think this is super important from an experiential standpoint for our listeners to get. It's not the same thing as going out and saying, well, I set up my IRA, I rolled it over, same custodian, it was a 401k, now it's an IRA, and I've got a pie chart that I got matched up with, and I'm going to use that pie chart to direct how I invest. Okay, well, that's something about investment planning, yes. And we're going to end up with some holdings in there, right? Are we indexing? Is it active? What is it? Where in the world is it? That's a conversation. But the point is that you did that. Okay, you went through some prompts and you made some decisions. You did a risk profile and you followed the pie chart, and now you've got this allocation, okay, for that one account. Okay, and that's a good start. That's a great start. The trouble is that you did that 3 or 4 or 5 times. Okay, and so now you've got 3 or 4 or 5 different pie charts that look the same or similar. Okay, well, how do we know what holdings are lining up together well? How do we know what areas of the market are lining up together well? Do we have an overall investment plan? Absolutely not. We've got a series of pie charts, okay? And sure, by golly, we need somebody to help us just navigate the pie charts, let alone put it all together into one, okay? So the very first thing that we have to do, and I'm arguing for doing this independently with somebody like Fideer Advisors or somebody else, find a place you can go where you don't have to sign up and pay for anything. You can get some counsel. And by the way, I like this, Paul, because you don't have to even come to a meeting. Okay. Now, if Fideer decides to work with you and vice versa in somewhere down the road through this ongoing second opinion where you're offered reports every quarter, and you have a question and you want help like that, that's different. Then we need to have a video interaction at least to get to know who it is that we're talking to. But as a matter of good quality, kind of combining and planning of assets, you should, in my view, you should not have to pay for that. Paul?
Well, it's extremely valuable. So somebody has to pay for it.
Well, sure.
Right? If it's free, then people don't value it.
Okay.
However, as people who watch this podcast and who are actively engaged, we're making it available. It's extremely valuable, but it doesn't come, it's not free. Yeah. But it's being made available.
Sure.
But let me summarize this, maybe help people understand it in a different way. You mentioned 401ks. Maybe someone's got some IRAs in 3 different places. And then they've got a joint account at Schwab. They've got several bank accounts. And they have all these logins. And so to figure out where they're at any one day, you've got to log into 6 different places, right?
Oh, yeah.
Well, what this program is you log into one place and it shows all your assets. Now, when it comes to the diversification idea, I used to run into people and they'd buy 5 different index funds. Well, I want diversification, so I'm going to 5 different index funds. Well, all those index funds own exactly the same thing. Mm-hmm. That's no diversification. Yeah. But they think it is.
It feels good.
Right. And so you might be not really diversifying at all when you're trying to juggle 5 different pie charts, as you mentioned it. So being able to pull them all together at once in one place not only simplifies just understanding where you're at, but it also makes any attempts at diversifying or optimization much more effective.
Amen. And, with that, the process for doing this, whether you use Fusion or some other program, is just my encouragement is just to do it. But what it requires is, to your point, Paul, taking your logins, right? Having a secure, I didn't use that word earlier, but have a secure location to do this. Ours is paid, provided by Morningstar, right? They use 256-bit AEP encryption on their system to collect all of your logins, right, that you provide, right, direct to the system. And, our sponsor, Fideer Advisors, gets a copy of what's happening with those assets so they can report on how things are going and then put that set of holdings alongside of an optimal set of holdings, right? That's the ongoing second opinion. So the process is request a universal login, keep your old logins, but plug those in. And if it's paper, which still is once in a while happening, you can basically take your statements and you can get a scan of all of your recent statements and you can upload those to our program sponsor at fideeradvice.com/contact. Okay. So whether you use Fideer or somebody else, and I get I would challenge you to find someplace else that'll do this without a cost. I sound kind of like Richard now in the book business. We're in all truth, this is difficult to find without cost. Okay, but it's what firms do for their clients. It's what our sponsor Fideer Advisors does for its clients. But offering it to the public is the unique thing here, right? To not have to be a client to get it.
Yeah, making it available to those that are engaged in our podcast. It's just our attempt to help you decide well.
Amen.
Okay. These are about making your decisions, having more confidence in them, whether we're advising or not. Just having more confidence because you can compare everything on one page in one report.
And with that, let me give you one example of how this has gone. And I write about this in the Life Cycle book, Richard. So I'll make a point to post that chapter or that piece of the book up on our blog tonight, along with our weekly roundup for our listeners. But in an example I used in that book, there was a couple that went about the business of aggregating assets. And in fact, I'm sorry, that's a recent example. This was an individual. So there was an individual who went about the process of integrating assets into one place. And she found that she had missed approximately 1% in return on over $1 million, and that she was taking excess risk beyond the marketplaces, that she was comparing against. Okay. So I don't know about you, Paul, but if I have a missed 1%, and this was years, we're talking about $10,000 a year on $1 million. That's 1% on $1 million, right? That I'm missing in return. Had I done what? I don't know, a universal pie chart, let's call it. Okay. And dial down risk to where the marketplaces had been. That's a very straight, that's not asset optimization. Okay. That's not Erin's favorite thing, but it's an important thing and it's a valuable thing. And I'm trying to point to the value. She had missed by the time I met her, and this is over 10 years ago now, as the book was written 12 or 13 years ago, Richard, but originally. But by the time I'd met her, she had missed over $50,000 in returns by not having aggregated her assets. Okay. So when you talk about the value of this isn't just, check it out, this is a neat idea. No. This is foundational to investment planning, no matter who you're working with, right? To have an ongoing second opinion. Okay. And so I'll leave it there. But that's an example. I've got others more recently. I think of the couple that two brilliant network engineers who did this with their plans and their investment assets. I mean, these people are amazing, just incredibly bright. They'd recently gotten married, and they found out that they were already millionaires on paper, and that their universal pie chart was not very universal, let's just say. Okay, so there's all kinds of things that go on in a week in my world that I could go into, but I'll leave it. I just want to encourage our listeners to do this work, to spend, I used to say on radio, take the day off and aggregate. Okay. It's worth it. Find a place to do this, your 401k custodian, even if you need to, go to fidearadvice.com/fusion or something like that. And you'll be able to make some serious headway as it relates to investment planning. And that's the series that we're in. So we've covered a lot of ground today. Unless anybody else has a contribution to make, I'll just say thank you. Paul, anything else?
No, I don't think so.
Well, it's just been a joy. This has been great to be back. I hope this session has been a blessing to you and others you decide to share it with. Next week, we'll get further into our investment planning series and what is the difference between diversification and optimization. Meanwhile, we invite you to connect with us online at astewardsview.com. From all of us at ASV, we look forward to connecting with you again next week. Until then, please do be wise and decide well.
You've been listening to A Steward's View. To learn more about Fidare Advisors or speak with Aaron, visit fidearadvice.com. That's FIDERE advice.com. To listen to this and other episodes of A Steward's View, visit astewardsview.com. A Steward's View is brought to you by Fidare Advisors, a registered investment advisor offering financial planning and asset aggregation. Asset aggregation systems are designed to align portfolios across accounts into a single, globally optimized investment plan for families it serves. Fidare maintains liquidity of client capital at major custodians and utilizes asset managers that have shown consistent historical performance through excellent risk management. This program is not an offer to transact any securities and does not constitute a financial planning engagement. Information provided has been prepared from sources believed to be reliable, but is not guaranteed and does not represent all available data necessary for making financial decisions, and is for informational purposes only. Fidare and its representatives do not offer tax or legal advice through Fidare. Please consult the appropriate advisor. Fidare Advisors LLC is a registered investment advisor. To discuss your situation or to learn more about Fidare, please visit fidearadvice.com. That's FIDERE advice.com.